Thank you very much. It's a great honor to have Micheál Martin, Taoiseach, Ireland. It's a special place, and he's a very special guy. He did it the hard way also. He served, and then he took a little time off, and then he served again. I've heard about that. That happens on occasion. And he's done very well. And we knew each other from a long time ago. But it's a great honor to have you in the Oval Office and have you at the White House. We have tremendous business relationships with Ireland, and that will only get stronger. The relationship we have personally and every other way is very, very strong and very, very good. So I just want to welcome you to Washington, D.C. and to our country, and thank you very much.
May I thank you, President. It's a great honour for me to be here to celebrate St. Patrick's with you.
Right.
And I thank you for your hospitality and the warmth of your reception. And I commend you in terms of the work that you're doing, particularly in terms of the pursuit of peace, which we discussed earlier. And I think that's going well. And you really have, in the first sort of 100 days of this government, you've done some extraordinary things very quickly.
Thank you.
Everybody's watching in that respect. So
thank you.
Delighted to be here. It's an honour to be here.
Well, it's a great honour to have you, and special people, very special people. I know a lot of Irish, and growing up in New York, I know a couple of your people that used to live in that beautiful Ireland, and now they're here, but they love your country very much. You know, they have a great feeling toward your country.
They have, and a lot come back for holidays and
they come back.
Stuff like that, and checking out their family, ancestry and things like that. You know.
Great, fantastic people.
Some go to Doonbeg as well. Yeah.
And they go. We love Doonbeg. I love them. I don't know if I'll ever see it again. Maybe I won't, but
we would like
I
to
think
come
I
back
will.
and see it,
We'll get there. We're going to get there. It's a beautiful place, wonderful place. Any questions?
Mr. President, on tariffs, how far
are please.
President Trump, how worried are you about the counter-tariffs from the EU, which were announced yesterday? And also, how worried should Ireland be, given the fact that it has a massive trade surplus with the US, over $50 billion? Micheál Martin might be quite nervous about what you're going to tell him today.
Well, I don't think he looks nervous to me. And if he was nervous, he wouldn't show it. No, we do have a massive deficit with Ireland, because Ireland was very smart. They took our pharmaceutical companies away from presidents that didn't know what they were doing. And, it's too bad that happened. It's a tremendous job I give. Look, the Irish are smart. You're smart people. And you took our pharmaceutical companies and other companies, but, through taxation and proper taxation, they made it very, very good for companies to move over there. And we had presidents and people that were involved in this that had no idea what they were doing, and they lost big segments of our economy. The European Union treats us very badly. They have for years. I saw that. I had it out with them in my first term. It did well, but we had to solve other problems, and we did. But European Union's been very tough, and it's our turn too. We get a turn at that also, but they have not been fair. They sue our companies and win massive amounts of money. They sued Apple, won $17 billion, and they use that for other reasons, I guess, or to run the European Union. So I'm not knocking it. They're doing what they should be doing, perhaps, for the European Union, but it does create ill will. And as you know, we're going to be doing reciprocal tariffs. So whatever they charge us, we're charging them. Nobody can complain about that. Whatever it is, it doesn't even matter what it is. If they charge us 25 or 20% or 10% or 2% or 200%, then that's what we're charging them. And so I don't know why people get upset about that, because there's nothing more fair than that. And we had a problem with Ontario, and they dropped that when I let them know what we were going to be doing. They dropped it immediately, so I'm glad, because electricity, you shouldn't be playing with electricity. It affects people's lives. Actually their life. I mean, it can affect, depending on weather, it can affect their life, so we can't do that. And it doesn't make sense that our country allows electricity to be made in another country and sold into us. Who did that deal for the United States? Okay, I looked at that long ago, and I said that's not something that's very smart. So we've had a lot of bad trade policies, and yet we're doing very well right now. But we're doing well because I won the election. If I didn't win the election, you would have had a very bad period. I think a lot of the stock market going down was because of a really bad 4 years that we had. When you look at inflation and all of the other problems wars and inflation and so many other problems. But we're going to have very good years. We had, I don't know if you saw a little thing like the cost of eggs, little to you, but big to people out there, down almost 30% in the last few days. We got it down. We did a lot of things. We have a great Secretary of Agriculture, and we did a lot of things that got the cost of eggs down very substantially, and so many other things. A very big thing that I'm very happy with is oil is down to $65 a barrel, and that's faster than I would have anticipated. We put on the gas. We stepped in the gas in order to get oil, and what's happening. So we're getting that down, and when energy comes down, prices are going to be coming down with it. So in a very short period of time, we've done a very good job. And I think that the tariffs that we're talking about, and again, reciprocal, I think that the tariffs, there are some cases where they're a little beyond reciprocal because, we've been abused for a long time as a country. We have been abused really for a long time, and we will be abused no longer. Okay.
Are you going to
are going to be coming down with it. So in a very short period of time, we've done a very good job. And I think that the tariffs that we're talking about, and again, reciprocal, I think that the tariffs, there are some cases where they're a little beyond reciprocal because, we've been abused for a long time as a country. We have been abused really for a long time, and we will be abused no longer. Okay.
Are you going to retaliate to the EU retaliation?
Education, sir, would you describe for us, is this meeting your vision by cutting about half?
days or a few days, understands that you are adding long-term value.
Yeah.
You're adding enterprise value. The strategy is better. Your ability to compete is better.
And in what proportion of the cases do you think you are adding value if you measure it in that way?
Well, the proportion of cases in which we're adding value is, I believe, close to 100. The proportion of cases in which it's reflected in action, movement of structure, capital structure, et cetera, directors, is probably, this is just a guess, but it's a majority. It's like 70%.
Right,
Something like that. It's not 90, it's not 80, I think.
So, for instance, last year you took action against Starbucks.
I don't want to be a wordsmith here.
Okay, let's phrase it differently.
But
you didn't take action.
No, but it's important because
you made an investment in Starbucks.
No, it's important to at least get this right in our minds.
Yeah.
Because the media loves battle, and they love to take down successful investors, rich people, whatever. So the colorful way that it's generally framed is attack. Okay? But let's cycle back to near the beginning of our conversation this morning. Fewer and fewer, literally fewer and fewer people are acting like owners.
Yeah.
And fewer companies are accepting the notion that the owners have anything to say to the management and the board. It's kind of shocking, and therefore we are we're certainly in terms of numbers among a short list of people who do call for accountability. When we win, the shareholders win. The days of greenmail are long gone.
So you
pay off.
So you make an investment in Starbucks, and you initiated a change in strategy, right? So they changed the CEO, changed strategy, and you made money. Do you think you're making society a better place?
It's not I have a variety of political and philosophical and philanthropic outlets for my compensation. And I do think we do make the world a better place, not in every single situation, but this style of investing it enhances the possibility and the probability that enterprises can service their customers. Competition is good. Having multiple outlets is useful. We happen to, I'll tell you the most basic answer to your question. There are layers of answer to your question, but at the most basic level, we have like 100 universities, we have hospitals, we have charitable trusts. And among the elements of what I just told you is because of we're not an activist fund and everything else is window dressing. We are an absolute return fund.
Which means that you want to make money whatever the market does.
Right. And so what the meaning of that, to your latest question, is in the infrequent and now a distant memory, in the infrequent, so seriously adverse financial market environments, these people have very few investment outlets that actually perform on that.
Sometimes things don't go your way, right? What are the characteristics of the investments which don't go the way you want? Do they have something in common?
Sometimes it's bad luck, but more frequently it's we missed something. We missed, or the hedges weren't the right hedges. The tracking error was much more than we expected. At the beginning of my career, 1977 to like 1987, Hedging was much more simple because we were long a convertible bond and short the stock into which the convertible was convertible. So that's very straightforward. And tracking error wasn't really a factor. We've become much more sophisticated in hedging, in creating bespoke hedges for different kinds of trades. But even those don't work out exactly all the time. But sometimes, the worst trades, and I don't mind mentioning them. It's a kind of a form of therapy and a pedagogical exercise. The worst trades are the trades that you misunderstand the risk. You put it into the wrong category. I'll give you two brief examples. One moderately horrifying and the other really, really bad. The one that's moderately horrifying is a peer who will remain nameless sold us a late-stage bankruptcy in a de-inking plant somewhere in the northern United States. Late stage denotes the risks are mostly gone in a complicated workout bankruptcy process, and the de-inking was their business. Waste paper and you're going to de-ink it and use it again, and that's good for the environment, it's good for the human race, it's good for the galaxy. Suffice it to say that it wasn't late stage. There were important bankruptcy elements that hadn't been settled, and the de-inking plant didn't really work. So aside from hating the person that sold it to me, It's just a mistake. And we lost. It wasn't that big a position, but we were much smaller.
And the really bad one, which was that?
That was an arbitrage position in Japanese index-linked bonds, inflation-linked bonds. Now, this arbitrage was perfect. JGBs, Japanese government bonds, full faith and credit, against JGBs that had as I recall, the principal amount adjusted for actual CPI movements. The Japanese CPI, Consumer Price Index, never moved much. It was bouncing around zero for decades back then. We're talking about 2006, 7, 8. It hardly ever dipped tiny bit below zero for a month or something, but was running plus a little. Okay. When we got involved in that horrible trade, a dealer showed it to us, and the dealer had several other people in the trade. The pricing was minus 2% inflation per year for 7 years. Minus 2%. It's the kind of thing where you look around the trading room and ship it in, right? Okay. So, to make a long story short, a long, painful story short, that thing went from an implied in the prices, minus 2% per year, at the worst, minus 4.5% per year. To make this very, very straightforward in terms of arithmetic, the JGB the inflation linker, went down 30% in price. Mm. That trip to where we still held it, we lost a gob of money, and it was going to mature just 6 years or so in the future, but we had lost like 30% of the principal, and these things are marked to market every day. Yeah. So that calls to action a different set of skills for money managers. A number of people were sold out of that position because when you misunderstand the risk and lever something up that you never should have levered up that way because you misunderstood the essential characteristic, you can have devastating losses. I had a lot of pressure to unwind the trade, but I kept the trade. And it was in 2008. There were a lot of, do or die positions back then.
Yeah, tell me about it. I was there. Why is it so important for you not to lose money? Where does the risk aversion come from?
It's a great question. Elliott was formed in 1977. When I was accepted after college to Harvard Law School, the greatest moment of my dad's life. He was a retail pharmacist, chemist. And he was sure I was going to be some really big shot, and he was sure that I had to learn how to invest because I was going to be a financial big shot. I was a psychology major in college, and I had no idea why I was going to law school, but Harvard Law School was...
Sounds good.
Might as well. And I think my psychology background titillated the admissions committee. And so the way my father and I dealt with my training was, and he's a retail pharmacist. He's in the drugstore every day, 12 hours a day. We traded speculative mining stocks and tech stocks. And I promise you, you could not name a way to lose money that Dad and I did not hone to the finest edge. Short selling, long puts, short calls. I was an early adopter of the CBOE, the options exchange. And that culminated in a catastrophic loss in the 74 bear market, where I was long stocks that I was certain because of my intellect. I'd done the research. I was certain they would go up, and I held them on margin. At one point, and I'm talking about $50,000 from my mom's special stash in the bottom of the dresser drawers. At one point, it was down 88%. 88%. My desire never to lose money again was a combination of wanting to get my parents' money back, and the feeling of real devastation. I mean, losing base, and my best friends, $10,000 here and $20,000. So when we formed Elliott when I realized that I could manage money and make money all the time, the convertible hedging was a very good strategy, very underserviced, high standstill rate of return. No really good valuation models. It was all on the fly and all relationships with the street. And along the way, so what I just said is not the full answer to your question. Along the way, what I observed was that when people have losses, meaningful losses, they tend to lose their minds. They tend to lose their judgments. Their sloppiness in accepting the state of play of the world when the skies are blue turns into a clutching darkness when the headlines and the stories and their friends are in trouble and suffering terrible losses. And so I knew that judgment is impaired. I also knew that if you could keep not only your head and your judgment intact, but your capital intact, these rare periods of time when there are special opportunities. I mean, those last few weeks in
Beautiful day.
Oh yeah.
Doesn't the sunshine feel so good? Living for the American public through deregulation and through energy, and we know President Trump is intent on passing his big tax cuts later this year. We're calling on Congress to do it. We also had a big win on Capitol Hill last night. As I talked to you all in the briefing yesterday, the president strongly supported the continuing resolution. He continues to support the continuing resolution. Now the ball is in Senate Democrats' court. Do they want to shut down the government, or do they want to keep it open and funded for the American people who need this government to continue moving, to continue building on the momentum President Trump has created? It's up to them. We'll see what they do. We hope that everybody on the Senate side will help to pass this bill so we can continue doing